Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, August 19th, 5:23 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Almost 2 weeks since I did a video between the vacation I was on last week and recovering from COVID, which my voice was worn out halfway through the videos. But Ted and Con are picking up the baton and doing an excellent job representing what we do here at Revere over the last week plus. Time for me to get back into it, though. State of the market. We're in an uptrend since the O'Neill follow through day last Tuesday. Check the trend gauge over here, market leadership. Well, what can you say when you've got the coveted four green arrows? That is the premier type of environment for an O'Neill slash growth investor. And we've also got the five major indexes cooperating, being above the short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average. Let's dive right into today. A subsequent follow-through day. This would actually make it the third for the Nasdaq 100 today since last Tuesday. Had another one on Thursday and another one today, with the Nasdaq 100 being up 1.3% on above average, higher volume than the prior day. You can't argue with that type of strength, although lots of people on Twitter will try to. But the bottom line is it's the eighth straight up day. Is it time for a pause? I'm going to show a picture here if I can find it. I will have it by the end because it's pretty important. In fact, let's bring it in right now. And this is a picture of the Keltner channels for the S&P 500 and also the average true range. A couple things I want to point out here. Uh, Here was where we topped back on July 16th, started the pullback. The very difficult 3-day pullback after the FOMC 2 weeks ago on a Wednesday. Tried to go higher, big negative reversal, gap down the next day. And then on a Monday, a huge gap down on quite a bit of negative news that came out over the weekend. But that's it, put in the bottom. So we went from 56.69 all the way down to 51.19, 550 points. And but we did bottom, and then everybody started just not believing that we were capable of regaining the lost ground. No, we're wedging. We're coming into resistance. The volume is lower. This bounce is going to fail. There's no setups. I heard it all. We saw it all, and a lot of the arguments were extremely coherent, well put together, and had logic to them. But it didn't matter. The market just said, no, we're going higher. This just looked like a brutal 3-day shakeout trying to separate you from your stock. Came down near the -4 ATR from the 21-day moving average before we started to bounce. Regained the 21-day moving average 5 sessions ago. That was with the first follow through day. And now we're up into the +2 ATR from the 21-day moving average. Possible that we pause here, but you just have to look over here a little bit further to the left to where we peaked when we hit the +4 ATR back in the second week in July before this big harsh move came down. But plenty of leadership. My 21 over 21 list, I had a very difficult time chopping it down after a lot of good performance with volume on leading names last week. And that tells us all we need to know. So got out of the way. Here we were very lightly allocated to the market with the big 3-day move down. Let's take it to the moving averages very quickly. And where are we? Here we are. S&P 500. You can see the harsh move down here. Undercut and reclaim the 150-day moving average on that last leg down, that last third day down, and then we slowly started climbing back. Well, here are the numbers on the day. Set that aside for a second. All green. Surprising after 7 straight up days. That was really one of the main topics of our pre-market call today. Can't pile in. We already had our beta over one, which is what we wanted to in GROTECTION. Were we going to pause? Well, the market did a little bit of a shakeout 5 minutes in, or 30 minutes in. We went sideways for 30 minutes, and then this ugly bar broke below the 30-minute range. Normally, that leans us bearish for the time being once you break the 30-minute range. But it was a 5 minute bar, and that's it. And then we trended up for 5.5 hours with a big squeeze into the close, closing at the high of the day. So the bears just don't know what to say at this point. All of their supposed macro arguments lined up. The Fed was offsides, and granted, we repeated some of these, but we're not going to be influenced by secondary indicators. We're going to go by what happens with price and volume. Got out of the way as we came down, followed our rules for getting back in. Those are as important as the rules for getting out. Because if you don't get back in when the market's going higher, you're just arguing with the market at that point. And the fact that leading stocks were working gave us the confidence to put more capital to work. But here are the final numbers on the day. The 21 over 21 list, 14 up, 2 neutral, 5 down. The big 8 up 1.7%, RG8 up 1.3. S&P opened up 0.1%. I showed you that little shake below the opening 30-minute range, and then it was trend up day, ended up just less than 1%. Equal weight RSP up 0.75%. NASDAQ 100 with the third O'Neill follow through day. Price and volume calculation up 1.3%, equal weight up 1.1, Dow up 0.6, mid caps up 0.9, Russell 2000 up 1.2, Global 60/40 up 0.62. Our flagship GROTECTION portfolio up 1.23% on the day. Let's get back to this S&P 500 now. I've got the pointer there on the follow through day. I've got the pointer here, which is the negative reversal after the FOMC. Then the gap down, then the Monday final shakeout before this 10 days off the low and 8 straight days up. I showed where we're getting into the +2 ATR. Doesn't necessarily mean we have to pause, just raises the odds of a pause. And then are we going to pause? Are we going to correct? Are we going to pull back? Well, that can happen through time or through price. So ideally for bulls, we just go sideways. We added 3 names today, and they're all up nicely after the ads. So it's just a matter of finding low risk entries, factoring in what the overall market is doing. So there's the S&P 500, NASDAQ 100, same thing, 8 straight up days. A little bit of a battle around the 50-day moving average the last 2 days, but blasted higher above there today and showing relative strength over the last week and a half. Dow Jones Industrial Average, uh, 5 straight up days, clearing the 40,000 level, coming into those recent highs. Haven't quite cleared that yet. S&P 400 mid cap, uh, following through to the upside, clearing here's one where the 21 did not break below the 50-day moving average. It just touched it and then curled back up, which is more bullish. Compare that to the S&P 500, where the 21 did break below the 50-day, but is poised over the next 2 days, as long as things don't fall apart, to come back up through the 50-day moving average. Let's go finally to the Russell 2000. Gap up Thursday, follow up higher high Friday, higher high today on Monday. So good stuff there. Another one because of this big strength that we had after that CPI day where tech fell apart and small caps started rocking. But look at that pullback from 2,300 all the way down to 2,000. Not easy to sit through, obviously. Luckily, we didn't get caught in a bunch of small cap names that completely came apart, nor were we in the small cap index as that came apart. But nicely back above the 21-day now, and the slopes of the lines going back higher. Those are the 5 major indexes. Let's go to equal weight S&P 500. That looks pretty darn good as well. Not up 8 straight days, but how about 7 out of 8? That'll do just fine. Equal weight NASDAQ 100 also making higher highs. back above the 21 and the 50. The 21-day still below the 50. Looking to rectify that over the next few sessions. Still showing equal weight tech weak on a relative basis versus the S&P 500. Let's go now to the VIX. After a massive move up above 60, VIX completely coming back down now with a 14 handle, closed at 1465. We always say we want below 16. That's where the indexes do their best work. And we got it. And what a move down that was since that huge spike 2 Mondays ago. How about the US dollar? Continues to be weak, and that's a tailwind for stocks making lower lows going all the way back to January. How did that impact precious metals? Gold, weak, just barely down on the day, but that's a very nice chart right there. Gold stocks playing some catch up over the last two sessions. Big update today, up 1.9%. Silver, the laggard of those three tickers, but up 1.5% today, regaining some key moving averages. One thing not regaining key moving averages is Bitcoin as it continues to be weak, showing the IBIT chart here. On to bonds now. BND, Broad Bond Index. Bonds have been trading in a fairly tight range recently. BND Broad Index just barely positive today. TLT, the long bond, up 0.46. Let's go to the yields. Not quite a lower low, as you can see that spike down from 2 Mondays ago, but heading lower, down 0.82% on the 30-year and the 10-year, down 0.64%. All right, let's hit the tail of the tape now. You can pause this. I'll hit the highlights. Big, probably the biggest event for the week is Friday, 10 a.m. Eastern time. Fed Chair Jerome Powell will be doing his annual Jackson Hole Symposium speech. So the market will be looking for clues. Market now expecting a rate cut in September. Some key levels coming into today. S&P versus resistance at 55.65, cleared it. NASDAQ 100 against resistance at 475, also cleared it. 8 days up, 7 days up versus the 8-day moving average, 5 days up versus the 21. Sectors, 11 out of 11 spider sectors positive. Yes, it was a broad rally, both from a sector standpoint and also from a market cap standpoint, led by biotech, semiconductors, home builders, and gold stocks. To the downside, the dollar, uh, gold itself, and crude, also uranium. Note the S&P 500 ATR. This is elevated at 1.47. And I didn't show this, but let me show it quickly. This is the 21-day exponential moving average of the ATR of the S&P 500, and it peaked 2 days after the bottom at about 1.55% before heading lower. You want to see this continue to head lower, and we're down to 1.47 and heading lower, which is what we want to see. It actually, on a 21-day moving average, got up as far as 1.98. They use a 50-day simple on MarketSmith, and it was at 1.55 there. But really, what we want to see is declining volatility as the market goes higher, and we're getting that also. So in-house on the portfolio today came in with a 1.18 beta, added 3 small positions, starters in CPNG, Upstart, and Spotify, raising our exposure to 1.26. This is what we own from largest to smallest, starting with ETFs and then going to the individual tickers. And the key for tomorrow we'll be looking at 8 days up. Is it time for a pause? We'll see. But the bottom line is, like I just said, 8 days straight up for the NASDAQ and the S&P 500. And see if we pause via price and correct, or just go sideways and correct via time and let the moving averages catch up. Let's take a look at some charts now. First, the 3 buys that we did today. Ted and Connor on these. Coupang breaking out a nice little handle. Shakeout on earnings. We're always looking for this to happen. Initial weak reaction, and then it closes high in the range and then follows back to the upside. Nice little declining tops trend line handle here. Some volume came into it today. Nice action there. Also, Spotify, we've been watching this for a while. It's been tight since a big shakeout after earnings where it tried to move out. This coincided with that 3-day move down in the market. But now a little bit of volume came in and it cleared this week and a half tight range, headed into the 350 level. So we did a starter on that today. And Upstart, we've been watching this since its earnings gap up. And certainly heading higher, riding the 8-day moving average, came back near the 8-day on Friday, making a higher high today on above average volume. So three starters there today. Let's take a look at the rest of the portfolio. ITB, Home Builders ETF, starting. We're looking for this to ride the 8-day higher, and we'll stick with it as long as it continues to do that. Largest position, Lilly has been putting in a very nice low volume handle after a sweet move up after its earnings report, tightening up very nicely, looking like it wants to go higher. Uber, half size position in this, making a higher high since we bought it. Race, half position in this. Look at the volume on this. 4 straight days of above average volume since its breakout. Really nice breakout from this 97-day flat base, only 10% deep on this. I guess there is no recession in luxury automobiles. Moving on, Kava, they've got earnings this week coming into that 100 level. Palantir continues to make higher highs since its big earnings shakeout. What else we got here? CEG. Uh, Outside positive reversal undercut the 8 and the 21 today and made a higher high. And then I showed the three new ads. This is actually incorrect here. Race should not be there if you're going by size. So the three buys today, 1.26% on our adjusted beta. That means if you just had a 100% S&P 500, your beta would be 1.0. We give every stock a Revere volatility score. Sum up the position size and the score, and that gives us our volatility, RVAB, Revere volatility adjusted beta of a 1.26. Let's take a look at the 21 over 21 list. We're going to skip through some of these because we already showed them, but I didn't have NVIDIA up there, and we do own NVIDIA. We've got a quarter size position in this, larger size for quite a few clients that have multi-100% gains from over a year ago, long-term capital gain. But maybe just have to watch NVIDIA for signs of the market. It looks a lot like the NASDAQ 100 and S&P 500. We showed Lilly with the flag. We showed Palantir making higher highs. We showed Kava coming into 100. We showed Uber making higher highs. Ferrari 4 days up with volume. ITB, very nice. CEG, Upstart, Coupang, Spotify. Here's the rest of the 21 over 21 list. A bunch of these carried over from last week. ALNY, after showing ants from this big move up, reported earnings, pulled back to the 21. Look how tight it was at the 21, reported earnings, and now going sideways over the past 2 weeks for that earnings report. Really looks like it wants to go higher. PMDX, negative reversal today, but it did get a bit extended. DoorDash, look at this jump up from 4 pennies for 2024 to $1.62 projected earnings, 4,512%. Now, granted, when you're going from a 4 cent base, this could be exaggerated, but companies that can figure out how to make money, grow sales, grow earnings. Look at the earnings growth, 23%, 23%, 27%, 27%. That's what you want to see here. Good reaction to its last earnings and continuing higher, riding the 8-day higher. That's why it's in the 21 over 21. IoT breakout last week, pull back to the 8, higher high today. Carvana making a higher high over 150 after a post-earnings shakeout. Fortinet, cybersecurity stocks starting to come back, and obviously with the CrowdStrike debacle, there have been three that are doing quite well since then. Fortinet is one of them. PanW, I'll go ahead and show it. PanW reported earnings. It's up 2%. That's a nice setup as well. And also CYBR, probably the big three there, that also had a positive reaction to earnings. Shark Ninja, break out of a flat base on earnings, continuing higher. SE, Singapore Internet, nice move up on earnings and continuing higher with relative strength confirming. GDX, we already took a look at this earlier, breaking the declining tops trend line on Friday. Howmet, the strongest of the aerospace and defense names. AppLovin, move up on earnings, continuing higher, still not out of the base yet. Axon, move up on earnings, tight sideways since then. And Coherent, move up on earnings and a tight day after that earnings move. And that's your 21 over 21 with three bonus names that we bought today. And that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. I'm on Twitter at @dvandenbord. Phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Flagship portfolio, GROTECTION, as we describe every night in these videos, is designed to grow assets during uptrends. Pull back, we pull back. Uh, there's good pullbacks and there's bad pullbacks. This is a bad pullback. We got the heck out of the way of that. There was some panic in the market, but the bottom was put in, and then we've re-engaged over the last week as the market has worked its way higher. But one thing you will never do is get hit in the back of the head with a 2x4, because if the market breaks this black line, the 200-day moving average, this is where all bear markets occur. Capital preservation critical to us and for our clients. We're going to remain engaged in the market as long as we're above the 200-day moving average. Won't be as engaged as we will be on days like today when we're trending above the 21 and leading stocks are working. Depends what the market's doing is dictates how much capital we put to work, but we've got a system in place, and even better, we describe it every night on videos, what we're doing. If you're familiar with the videos, you really shouldn't be surprised at anything that we do, because our rules are pretty firm. We stick to them. And if you're interested in getting on board, reach out to us. And with that, I'll wrap it for Monday, August 19th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.